keep this moving for a panel I could not be more excited about. We are finally talking about the subject that everybody wants to talk about: consolidation and M&A. All right. With that, we have a good friend, Michael Aiello. You know him, you love him. He's been with us for several events now. Mike, how are you, sir?
Good. How are you, Elliot?
I am well. I'm pumped to hear some expertise on the upcoming topic, my friend. But with that, I'm going to let you take it away, introduce yourself and your cohorts.
Yeah, absolutely. Thank you. So, hi, everyone. My name is Mike Aiello, and I'm the CEO and managing partner of Centri, where we focus on accounting advisory services for the cannabis industry. I'd like to welcome you here to our panel today, where we're going to focus on consolidation in the cannabis industry. And it's certainly been a busy few months, and it appears that the time for consolidation is here. It's my pleasure to introduce you to the panelists here today. First, I have Dave Traylor, who is the Senior Managing Director of Golden Eagle Partners. I have Josh Lawler, who is a partner with Zuber Lawler. And I have Mike Lutz, who is a partner with Crowe, LLP. So guys, we do have limited time here today, but I think it'd be great if we could go around the room and you could give a brief introduction on yourself and your firm. And I guess let's start with Josh.
Thank you, Mike. So Josh Lawler, I am a partner at Zuber Lawler, where I practice mergers and acquisitions, finance, commercial transactions, much of which is in the cannabis space. We are a 40 or so person law firm with offices in LA, New York, Chicago, Silicon Valley, Denver, Phoenix, and Austin. Denver and Phoenix being entirely cannabis-focused offices. We like to think we are very much preeminent in the cannabis space.
Great, thank you. Dave, why don't you go next?
Thanks, Mike. Thanks, everybody, for taking some time to listen. I know everybody's busy these days, so I'm with Golden Eagle Partners. As Mike indicated, we're one of the first investment banks in the cannabis sector. I was lucky to have a background that fits kind of in today's discussion. 2 undergrad science degrees, worked 15 years in operational roles in biotech companies in Berlin, Boulder, and Silicon Valley, and then got into banking in 2005, doing biotech deals, and then got into cannabis in 2013. Joined CERN as chief business officer in 2014, one of the first pubcos. And then we've been doing deals in the cannabis space since, 20 deals, over 20 deals. And then certainly I failed to mention that one of the things that's interesting we can talk about today is innovation. I have 3 patents too in bioprocessing. I'm also the chair for the Scientific Advisory Council for Athletes for Care.
Great, thank you. And Mike, how about you?
Mike,
you.
I bet you're right. Thank you. Trying to be polite there for everyone. No background noise. Mike Lutz, partner with Crowe, LLP. We're a full service accounting and consulting firm. I'm located here in Denver. We're national, about 35 offices. We've been serving the cannabis and hemp community pretty much since its inception here in Colorado. Whenever you might circle a date on the calendar, we were pretty much there, and with the growth in the industry, we've taken steps to expand that geographically with our team and getting people really coast to coast up to speed on the cannabis industry. And we provide, I specifically provide due diligence, quality of earnings, and those type engagements. And we're working, providing all sorts of services to the cannabis space, be it audit, tax, advisory, what have you.
Great, thanks, guys. All right, well, let's jump into it. I think a steady theme here today and lately is that there's been a lot of deals over the past few months, to say the least, and a certain high-profile one comes to mind, with being GW Pharma. The previous guys were just talking about that as well. So let's start there. I guess, Dave, let's start with you. What are your thoughts on the GW Pharma deal, and what do you think the impact on the cannabis industry will be?
Dave, you're on
Thanks,
mute.
Mike. Thinking about it, it's interesting, especially too in the last week, we've had the Series Parallel deal too. So it was with regards to GW Pharma, I'll get to that in a second, but I think it was interesting if you look at the comparison between the parallel and the GW Pharma deal. Certainly the proximity is interesting within 1 month. And then if you look at the dollar value of both deals are, very large for this sector. And then if you want, I think, look at some of the commonalities. I think one of the things that we drew, and I just wrote an article on this, will be published pretty soon. I think three of the common things really are the biotech or the expertise that both these deals involve or entail, the innovation or the IP component that they're looking at, and also the capital that's both needed in the combined entities. And I think that really gets to the fact that, so if you look at GW Pharma, the deal, I think, mainly was around IP. We believe a number of people think it's around product and product portfolios and potential of future revenue. We mainly think it was about IP because if you look at current GW's portfolio, they have 16 US issued patents and 76 patent applications. So I think if you look at that as far as what's the GW Pharma company represents, it's really about, we believe, IP and some revenue, although it's not as large as many companies have, maybe even in the sector. So we think that really the fact, the IP and the size of IP, it's limited as far as its relevance to ongoing M&A deals in the space. But I'm sure my panelists may disagree.
Yeah. Josh, how about you? What are your thoughts on the GW Pharma deal and some of the items Dave just mentioned?
Sure. Well, I agree wholeheartedly with the comment that it's about IP. If you really look at what Jazz is saying about the transaction, there's a lot of emphasis on purchasing the drug discovery platform within the cannabis space. And I have been unaware of the number of patents that they have, which is a very interesting statistic. But if you look at the deal and how it's valued, and you value it based on earnings and revenue, it's a really rich deal. But if you look at exactly what David was saying in terms of what's in the pipeline, it makes a lot of sense. Now, in terms of what it means for the rest of the industry, cannabis is a funny industry because, if you look at, GW Pharma, that's a pharma play. It's not a CPG play. It's, not a supplement play. It's pure, pharma. And from that perspective, I think it says something about the types of companies that, are going to be looked at in that light, which interestingly enough, I think there's more of them in the psychedelic space maturing than there are in the cannabis space. I think there's an entirely different set of M&A going on in the rec market, in the CPG market. And, Red, White, and Bloom this morning announced that it purchased, Florida operations from Acreage. And that's a fairly large deal. It's not the size of GW Pharma, but it's a fairly large deal. And I think we're going to see more of those types of things, particularly as we get closer and closer to, the end of federal prohibition. At least we think we're getting closer, because that's going to be something of a once in a lifetime type of event.
Got it. Yeah, good insights, guys. And I think you both just touched on it. So let's stay on this topic a little bit further. And Dave, I'm going to go back to you here. Do you think this is a signal that big pharma is coming, that we have a next wave coming there, or not so much, not so fast?
I think everybody that's listening to this and all my fellow panelists hope that it is. So more money comes in. Not so sure, but we do know of one of our hemp companies we know. And that's one thing I think is important too, at least from what we see it, there's a difference between what we're seeing in the marijuana and the hemp as far as transactions go. But I think we do know one well-known multinational pharma company that's been kicking the tires on hemp companies, and they're talking to one of our clients. Don't know if there will be a deal done there. We have been in touch through my biotech background and experience, talking to a number of the C-suite executives in large pharma companies. And it was interesting because a lot of their comment is that they're looking for two main things: intellectual property and composition of matter patents. Three things, I guess you want to put that. And then also good, robust clinical or preclinical data. And from their perspective, that's still lacking, which I think it gets back to the GW Pharma deal and the fact that the clinical data they have and some of the leading the charge there. But then also the fact that I think a lot of the companies that they're looking at to do deals with don't really have the capital. For example, if you look at the Parallel deal, they did a PIPE concurrent with that deal for $225 million, in addition to around the $200 million they had in the SPAC. So I think that they did that for a reason, we believe, is the fact that R&D is expensive. And so that's the problem that we think in the sector too, is that there's not a lot of people that have those companies that have those deep pockets to do that R&D. But I'll finish there.
Got it. Got it. And Josh, I know you were starting to touch on this already here too, but maybe if you could expand a little bit, and what's your thoughts? Do we have a big pharma wave coming? A couple of years away? What are you thinking?
Oh, I think it's probably a couple of years away. Really, I think we're at the very, very leading edge for one of the reasons that David said, which is there's just not the clinical data, and in a lot of cases, there's not the money to develop the clinical data. I think companies that are building discovery platforms, and that's the IP, in addition to whatever drugs and molecules they may be looking for through that platform, are going to be at an advantage. And I think that you'll see that going more and more. And same story as every other industry. Patents creating barrier to entry. It's always going to be valuable.
Got it. Mike, how about you? Any thoughts on big pharma and some of the stuff we're seeing here?
Yeah, I think my thoughts would probably be the result of an anecdotal information, but talking specifically to our clients and talking with our partners who serve this industry a lot, just not anywhere near M&A, right? Just in general. And I think the feedback we have received recently is very similar to what Josh and David just said. In that it's there. Pharma companies didn't just wake up in the last couple months and figure out, oh, this cannabis and hemp thing could be interesting. They've been looking at it for a long time, and the IP is a huge component, I think, of these recent deals. The flip side is the reason why we would say that what we're hearing, what Josh and David just said, is echoed from our clients. Is it almost gets pretty simple in that as long as cannabis is still Schedule I and federally illegal, and there's no way to access the banking, it's difficult to see like the wave, so to use that term, coming, right? But that doesn't mean that they're not interested, they're not involved. I mean, they are without question. But this right now seems more like a dipping the toe in the water sort of thing, which I think going after pipeline of research, IP, things like that probably fits that description, as opposed to saying that pharma wants to be the next big consolidator of MSOs, for example. That's just that's not happening, obviously. So.
And Mike, I can add to that real quick. One of the things my experience in biotech was interesting is that, and there's a reason why Jazz did this deal and pharma didn't, because at least from our perspective, pharma's always had the attitude that if they have a phase 1 or phase 2 asset, that's pretty risky, and they'd rather have it go to phase 3 or the market. So they'd rather pay more money later and de-risk it than take on a risky project and get a better deal on it. And I think you can draw that parallel in certainly the cannabis sector.
Yeah, for sure. Great insights, guys. I guess just moving away from pharma here for a moment anyway. Certainly been a lot of deals here, and everyone's seeing 2021 be a year for big deals. Josh, I'll go to you. Do you think 2021 is going to be a huge year for M&A in the cannabis sector?
Yeah, I think we're going to have a lot of transactions. I don't think they're necessarily going to be pharma oriented, but I think in the CPG and the MSO space, there's likely to be a lot. I think there's a lot internationally that's going to take place, and we're starting to see that, in our practice, where certain other countries and areas are opening up for licenses, and there are American MSOs that want to put their feet down in the EU, for instance. That's leading to a lot of transactions. Just generally, it's still a very nascent industry, and because of the federal prohibition, as Mike was saying about the banking, and certainly international shipments and cross-border logistics, there's just a lot of stuff that people can pick up, different little pieces of companies that are going to be useful to them. And they're not going to be the giant pharma deals. It's not necessarily going to be, Jazz and GW. But, if you're looking at kind of the middle market space, I think we're looking at just a ton of activity.
Yeah, definitely agree. Dave, why don't we go back to you here? What are your thoughts on this? Do you think it's going to be a big year for M&A just at all?
Well, I think it's interesting when you talk about, big year, are you talking about deal size or deal numbers? I think the deal size or the dollar values, certainly it's going to be hard pressed to beat the two deals we just mentioned or talked about. And the numbers, I think, certainly will be better than last year. Breaking again to between, I think the hemp deals are going to be more prevalent, frankly, than the marijuana deals, just because it's going to be, I think, predicated on the lack or less availability of capital in the hemp sector. There's going to be a lot more consolidation, we believe. But certainly, Josh has a good point on the MSOs. I think they're going to go shopping. They have new coffers. But I think what's interesting, too, internationally, I think the MSOs are going to be more focused at home to build what they have a limited, finite amount of time to build, their infrastructure for what everybody sees as a loosening. And I think that's going to give an opportunity for the LPs out of Canada, frankly, to go shopping and get some great value internationally, because I frankly don't think the MSOs are going to be as focused internationally, but I'll leave it there.
Mike, how about you? You think we're in for a big year M&A wise, and maybe to kind of piggyback on the guys here, just maybe volume wise, not as much, dollars, because we're seeing the dollars there, but do you think we're going to see a lot of activity?
Well, yeah, I was going to say that's where I think it's going to be, is the activity. It is hard to duplicate a deal like the one we've all been talking about. Whereas I think when you look at the fact that there is quite a bit of capital available, I think Viridian put out a study that said that there's about $1 billion of announced deals that haven't closed. I think that recently came out at the end of January. There's a lot of stuff got announced right after the election. I don't know if that was pent up demand because of the election, probably a little bit there, but it feels like there is consolidation. It feels like there are a lot of still smallish, or, to use a term that we're all familiar with, middle market type transactions to be had in the cannabis space. And what it starts to look and smell like is actually companies looking at transactions, like we said, getting into multi-state operators going elsewhere geographically, as opposed to maybe the land grab of what was going on maybe say 3-ish years ago, when everybody was just rushing for deals because they had a crazy amount of capital. They had inflated stock price, and I'll use inflated in air quotes, right? We don't want to offend anybody and say, well, your stock price was or was not inflated. But let's be honest, when you have shares that are trading pretty well, you can do a lot of deals, and it's not just cannabis. We see it all the time. So I think now you are going to see a lot of activity this year, but it's probably going to be more strategic. And then I think the last thing, since I'm sitting in an accounting firm, I have to say it, is that take away cannabis. If they change the capital gains laws this year, which a lot of, for next year, which a lot of people think that's on this administration's radar screen, that's going to fuel a ton of M&A, just like it did when that happened. I think it was about 8 years ago. It was either 12 or 13. I can't remember which, where everybody knew it was changing, and anybody that wanted to get a deal done to get the lower capital gains, was getting the idea around November 1st. Hey, if I close before the end of the year, let's get this done. So you could even have factors like that aren't cannabis specific, I think, that are really going to drive a lot of activity this year. At least that's what we're expecting, and that's kind of what the early first 2 months of the year information is kind of indicating.
The other thing I'll throw out real fast is we can't ignore the SPAC factor. There are a number of SPACs, more than there should be, quite honestly, that are going to be looking to figure out how to use their money before their time runs out. And that's going to lead to a lot of transactions. It's going to lead, frankly, to a lot of transactions that are overvalued for what they are. I think it's also likely to lead to a lot of roll-ups in the space for different companies that are looking to be purchased by a SPAC that don't have the size yet to make that a legitimate possibility.
Yeah, and one last thing to add to that too, and I know, Mike, that this is an M&A panel, but I think one thing that's really been lacking in this sector, like when I joined Cerna, we did, I think, the first option-based deal in the sector. And there's always been, I believe, too much of an emphasis on M&A. And so if you look like a normal sector like biotech, predominantly most of the deals done are like partnering or what we call incremental deals, so that are co-development, cross-licensing, joint venture, et cetera, not M&A. And there's, if you look at cannabis, it's been the flip of that. So I think in the next 2 years, I think we're going to see a lot more smarter deals being done, especially ones that are not M&A, or they're like incremental M&A where it's an option-based arrangement.
A lot of great insights, guys. Let's keep moving along here, and you guys, it's perfect. You touched on some of these already here, but let's think about subsectors. Is there certain subsectors or geographic locations that you think we're going to see more consolidation than in another area? And I guess, Dave, let's go back to you. Let's start with you there. Is there certain subsectors or geographic locations that are going to be hottest?
Yeah, well, hopefully everything's hot, right? Well, we were talking this a little before, and and I'd love to have the panelists, my panelists, weigh in and maybe a different perspective. Our thought is that the limited license states, maybe not as much. We see California and Colorado, the very fragmented markets, doing more consolidation. We certainly see that here in the opportunities because it's just not very top heavy with these markets. So we certainly see that happening. Again, we see international. We've talked to a number of the groups we know internationally, both Europe, South America, and South Africa, see consolidation continuing because, there's a lot of froth with, groups like Canopy Growth buying into international operations and divesting. So I think that's going to provide an opportunity. But I think most importantly, I think like the ancillary pick and shovels part of this industry is really going to pick up in the next year to 2 years, because that's going to allow a quicker and easier entree for some of these people now that have a renewed interest due to the, kind of changing the guard in Washington. And that's an easier lift, if you will, to, invest in an M&A transaction, one of these ancillary companies.
Got it. Mike, what do you think? Yeah, you seeing any subsectors or geographic locations that you think are going to be hottest?
We are. When we hear from our clients, we hear a lot of discussion and excitement about the geographic expansion for the MSOs, and not just because of what happened in the national election, but I think anybody who's on this is aware that there are a lot of states that had some pretty eventful election results in November. It wasn't like it was one or two. I think I think we had 4 or 5 that went recreational, which most of those I think we saw coming. Mississippi, I think, was the one that went legal medical, and so there's still plenty of room for. I should say, when we hear our clients say there's plenty of room for growth, not to say they're not excited about possibly an international opportunity or something like that, but whereas 2-3 years ago everybody wanted to hear how we could help them if they pursued a listing in Canada, right? Some clients did that, some didn't. Now, I don't want to say they're not interested in that, but they're not really focused on that. They're focused on what can we do to actually drive value. If you think just in a traditional M&A construct, and that is, either more vertical integration or expanding into different states. And then I think the last thing that I think continues to feed that thought, at least what we hear from our clients, is that in addition to all the election wins that the cannabis industry had, use that term, there's information out there publicly available that said that anywhere from 10 to 15 states had some pretty good momentum for cannabis and hemp initiatives that just got stalled in 2020 for a host of reasons, but mostly COVID specific, because COVID just took over every state legislature's focus, and for obvious reasons. So that stuff, that's not going away. It's not like it missed out because there was a, lack of initiative or anything like that. So with what we just had in the election and these 10 to 15 more states that continue to just seem to make that progression, that's where we see it. We see MSOs expanding geographically, and I think the one in New Jersey is the biggest one. There's no way those states are going to sit around and watch New Jersey collect all that tax revenue, just like when New Jersey went legal sports betting. Those states aren't going to sit around and let New Jersey just collect it all, right? So that's where we would say, at least that's where we're prepared to help our clients. We're expecting that'll be the majority of things that we get calls for is MSOs looking to expand.
I would agree with that. I mean, the geographical footprint expansion is, I think, the most obvious and kind of biggest fastball pitch. It's where, a lot of the companies, again, middle market-ish, but are still looking to just, pick off the different areas that let them expand more easily. The other spot I would say, which is maybe a little bit less obvious to pick and choose, but the CPG space with, the brands trying to come up with, a consistent selling product that they can, first of all, create a consistent product in disparate states, which is a challenge right now because you can't take cannabis across state lines. But the other piece also is, kind of coalescing behind various celebrity endorsements and things of that nature. And we've seen a lot of value to a company that has, a particular celebrity endorsing the product because, it's instantaneous market recognition. So we think that those deals are going to continue to go as well.
Okay. It keeps hearing like we see a trend towards the mid-market and a lot of other transactions outside of these mega deals. So Mike, I have a question for you. Seeing all these big deals, but all these other smaller deals as well, or mid-sized deals, I guess I'll say, what would you recommend to companies that are thinking about getting into M&A or have that on their radar for the year of 2021?
Sure. You can say small deals. I've been doing this for 25 years, and all deals need an advisor, right? What should they be thinking about? I mean, look, this is coming from an advisor, so maybe you have to chuckle and take it with a grain of salt, but don't wait to get your advisors involved, really. And I see Josh nodding. I'm sure Josh and I could probably, and you, Mike, could probably tell plenty of stories of a client who called us and said, or a prospective client, we got an LOI, we don't know what to do. Somebody approached us, what should we do? We don't have an audit and we're not sure about our tax and all that good stuff. Well, sorry guys, we can try and help, but the train's kind of left the station at that point, right? So, and I would echo what we said earlier about just the broader market being pretty busy. And I apologize if you can hear in the background, we got a snow day in Colorado, which is pretty hectic. So there might be a little background noise. Nevertheless, the M&A market is frothy, cannabis aside. And a lot of us that have been doing this for a long time do think that this year is going to be pretty crazy because we think there's going to be some stuff related to tax. So don't wait. Really don't wait. If you think you are going to be a target, get ahead of it now. If you were thinking about doing audits, pull the trigger. Don't wait. It's February 25th. I'm not an audit partner, but I'm a licensed CPA. I can tell you it's probably not impossible to try and go back and get some sort of rollback inventory observation for that December 31st date. But I tell you right now, if you wait until June, it's not happening, right? So tax, if you've been rolling along with your 280E and everything and your tax filings and you think, we're okay. We've never been audited. Okay, great. But I'm not sure that, I'm ready to hold up to due diligence. Well, don't wait until somebody calls you. Get out ahead of it. And then the flip side is, look, I mean, if you're acquisitive and you've got some professional or institutional money in your capital structure that might expect more traditional services, like calling people like David and Josh and me, whereas 2 years ago you did an acquisition where you bought 2 dispensaries and you bootstrapped it and you did it on your own and everything was great. Your new capital providers are probably going to be asking you questions like, well, who'd you get for third-party due diligence? Who looked at this stuff? You know, who's advising you on the purchase agreement? How do we know that this target's tax filings aren't going to blow up on us 6 months after the acquisition when we bought all the shares, obviously, because most of these are going to be share transactions, probably all of them. You know, don't wait. Get your advisor team lined up, ready to go, establish those relationships, and you know, be ready to go. Don't make it an 11th hour fire drill, because you know, threats are never good, but you might be able to get the service provider. You might pay those, you know, doctor on call rates as a result of calling someone on Thursday and saying, I need you by Monday. But there's a lot of factors that come into play. And just like in anything, you know, if you have good planning and you have a good game plan and you don't wait till the last minute, you'll probably be able to execute on that. And if you don't, you know, weird things might happen. So I would just say, just get out ahead of it. There's no reason not to, and it'll end up working well for everybody, I think.
Yeah, Josh, how about you? What should they be doing now to prepare?
I'm never going to argue against getting your service providers in place early. That's for certain. But you know, there is an emphasis on it. I mean, I can tell you, we've already this year seen, you know, a few deals where, you know, we think we're doing a debt transaction or sale leaseback, secured by real property or what have you, and suddenly a borrower comes up and says, "Hey, we just received an offer to buy the company, so you know, put everything on hold, pencils down." Which is kind of an anecdotal way to say that, you know, people really will show up on your doorstep. You know, if you're sitting there with, you know, between 5 and 20 dispensary locations, people know about you. There's no question. Like, you're like, if you think you're in a vacuum, you're totally kidding yourself. And at that point, what Mike said is absolutely right. You know, having your things in line, to, you know, one, just make sure you've eliminated any of the deal killers, which, you know, tax is kind of one of the number one items there. And two, that you are optimized really for a transaction that can go smoothly, because some of the transactions do generate outsized professional fees because there's just so much stuff to fix, or a crazy cap table is pretty common. If you are a company that's got a crazy cap table and you know who you are, you know, you've got a lot of safes, for instance, which have a lot of different funny valuation types of things of that nature. And these are smaller companies that have those, but, you know, it's worth restructuring to fix all that, you know, if times are kind of a little bit quiet for you. So, you know, that definitely is significant advice. The other one I'd put out in there is, you know, if you're looking to sell, definitely get an advisor to help you out with it. You know, the valuations in the market have a lot of variance depending on who you're asking and how things are positioned. So, you know, even more so than some other industries, you know, a good financial advisor, along with a good lawyer, of course, but a good financial advisor is really pretty critical.
Yeah, thanks, Josh. And
You had to really just I'll speak really quickly on operationally. Just a few things. And for example, you always know the Gretzky quote, you know, skate to where the puck's going to be, right? So having advised a lot of, and this is to companies who want to get acquired, right, that are out there. I mean, certainly one thing that we always say is uniqueness breeds value, right? So, and that's one of the key things we do as a banker is, you know, certainly differentiate our clients. And that's one of the key things. The other thing, having worked in Silicon Valley, is focus. And that's been endemic, or lack thereof, endemic in this industry, whether it's marijuana, hemp, and now psychedelics, which we know some about. You need to just, you know, like Jack Welch said, find a couple things you're really good at and do them well. And that's just been a real problem. And the other last thing too is like consistent quality and competitive advantage. That's one of the things too that we've talked about. Like, let's get to talk about the brands, right? We talked about innovation, everything else. I mean, everybody knows on this conference that brands are built on consistent quality. And so if you can do that, and again, that's been lacking in this industry. So if you can really, as I said with Gretzky, shoot for that and get to those points, or have those as targets, that's a good thing. And the one last thing is humility there's been way too much arrogance and too little humility in this industry. And so if you really do want to get acquired, take a lot of those things together, put them in a plan. And that's, I think, that one of the better ways to get where you want to be.
Thanks, guys. Getting a note here that we have about 2 minutes left. So just go around the room here. Where can people find more about your company, your firm? David, why don't you go, and then we'll just quickly pass it around.
Yeah, goldeneaglepartners.com. Also, if you're interested, you can Google a weed grows in Davos, or as I mentioned just now, humility in cannabis, and you can pull up some of the mentions we've had in the press. Thanks, everybody, for your time.
Josh?
Yes, we are available at zuberlawler.com. Our consulting arm you can check out at globalgo.consulting. You can also find us as the law firm of the year in Marijuana Ventures magazine, and any number of other places if you just Google on the net.
And Mike, how about you?
Sure. Yeah, we are at crowe.com, CROWE, pretty easy. I am told with very good authority that we are going to have cannabis and hemp on our website under the industries within about the next month to 6 weeks. And that's been several years coming. So we are very, very excited about that, though we've been working in this space for 7, 8, 9 years, however long it may be. You can find, I'm on the website there somewhere. My bio is there, and I'm on LinkedIn as well.
Great. Thanks, everybody. Once again, my name is Mike Aiello, and I'm with Centri. You can find more out about us at centriconsulting.com. And maybe back over to you, Elliot.
Yes, thank you all. The leaders of, I would say, the consolidation discussion, Josh, David, Mike, and Michael. Always a pleasure to have you all with us, and we look forward to continuing this discussion, maybe getting an update later in the year. So, gents, thanks so much, and we'll talk to you all very soon.
Thank you, Elliot.
Thanks.
Thank you, Michael.
Elliot.